Guys, welcome back to the channel, welcome back to a new video. I'm very sorry the lighting is a little bit shit because it's already late here at night. I quickly want to move over to the Fed decision of rising the interest rate with the expected 0.75%. And therefore they spooked the market a little bit in the beginning of the week because they said first only 0.5 and now it turns out they wanted to have 0.75%, and it said already earlier this week, and I think it was even in this morning's video, that it said it's going to be very interesting in what they're going to say after the meeting. Let's quickly head over to the charts. I first want to start off with an article from CNBC where they are explaining exactly what is going on and what they're expecting for the rest of the year. Therefore, I think we need to go a little bit to the beginning.
75 basis points. The Federal Reserve Open Market Committee raising the funds rate by 75 basis points to a new target range of 1.5 to 1.75%. First time they've done a 75 basis point rate increase since 1994. It plans to continue its plans to reduce the balance sheet as laid out in the prior month and anticipates additional increases in the funds rate. To wit, the new forecasts from the Federal Market Committee show that they see the rate outlook for 2022 at 3.4%. That's up from 1.9. Pretty much meets where the market is. For 2023, it's boosted its own rate outlook, the median official, to 3.8% from 2.8%. That's a full percentage point increase. And again, pretty much meets where the market was at. Maybe the market met where the Fed was at. We don't know which way this works, but it is one of the most dramatic increases in the outlook, the near-term outlook for sure, of the funds rate that we have since we've been publishing this thing since 2011. The Fed repeating that inflation remains elevated. It sees the Ukraine war putting upward pressure on inflation. Says the China COVID situation, the lockdowns there are worsening supply chain problems. Economic activity, it points out, picked up in the second quarter from weakness in the first, obviously. It cut, however, its 2022 and 2023 growth forecast pretty sharply for 2022 by 1.1 percentage points, boosting the unemployment rate a bit for this year, 3.7%. But when you go out, they've raised it by 0.5 point in 2024, boosted its core inflation outlook just a bit to 4.3% for this year, but otherwise sees core inflation declining to around its target of 2.3% in 2024. Finally, this was unanimous except for the fact that Esther George, the Kansas City Fed president, dissented, wanting a 50 basis point increase, which is interesting in and of itself. But there you go, guys, a 75 basis point rate increase, and the Fed saying it anticipates additional increases in the funds rate will be appropriate. Back to you.
Okay guys, so real quick, so the interest rate will be risen by 0.75%, therefore I think it then ends up at 1.5 to 1.75%. I think that's what we just saw. But what is interesting is that they are thinking that the growth outlook, look here at my screen, will go to 1.7% down from 2.8%. And in other words, someone else also said, well, do you expect more unemployment? They said, well, we don't see it yet. The labor market is very strong. Listen, if they are going to start cutting their outlook, they are going to rise the interest rates. They know what is coming. We all already knew what was coming. We are getting a recession. 100% sure. We are getting an economic recession. I was listening during the live Q&A of all the guests there. One of the reporters, that was one of the guests, and it said, why did you rise the interest rates from 0.5 to 0.75%? Because everyone was expecting that 0.5, and they said, well, we got a little bit surprised by the CPI data that came out early this week, so it was a last minute decision to rise that interest rate. And he said, well, we have not really expected that, and we don't expect that to happen again. To me, this sounds like everything's on the table. Every scenario is on the table. They will do whatever is necessary to fight inflation. So far, thumbs up, very well, good job. That is what is needed to be necessary. I also in the same camp, I would say, let's grind to that recession, get it over with, cut it, major layoffs, the interest rate will spike, the housing market will crash, the stock market will crash, take liquidity out of the market. It's going to be very painful, I get that, but we need to reset this market. And I'd rather have it sooner than later. So that is so far good news, but they are trying to slowly kind of manage the story a little bit. as we already have seen in the last 6 months to 12 months, actually in the last couple of years. But what is really is being shown in the last 6 to 12 months is where they're saying everything's going well, print money, let's go forward to, oh, maybe we have inflation, oh, maybe it's transitory, no, it's not transitory, okay, we need to maybe start raising interest rates, yeah, we're going to start raising interest rates, just a little bit more, okay, oh, maybe we need to cut down the economic growth, that's what we're seeing right now. 6 months from now, December 2022, trust me, they're going to say, yeah, okay, we're going to have a recession, okay, we're going to have major layoffs, but we need to do this, this is very painful, we're going to do whatever we can to control price stability. Write that down, mark it. Price stability is something that they use a lot in their communication. They will do whatever to keep that, to let that inflation go to 2% and to control price stability. And therefore I think we're going to see many more of these interest rate cuts, but they are going to try to manage the stories meeting after meeting after meeting after meeting to let it go as smooth as possible. They are not here to damage the market. They want to control it, and they're trying to kind of trying to prepare everyone for what is coming, because they know millions of eyes are on their kind of meeting, and not only from the States but also from Europe, from Tokyo, all kinds of other Asian countries. The Fed still is the most important central bank after the one in Europe and then in England. So they know that whatever they're saying, it is being weighted very much against what the other central bankers are doing. So therefore they're slowly trying to manage the story and trying to manage the expectations month after month after month. And therefore all the meetings that they have in public, trust me, they are not a coincidence. So if you see someone of the Fed and the board somewhere in a program, somewhere in an interview, that is not a coincidence. All of that is managed. All of that is very carefully thought out step for step. These people are much smarter than you think. They're not here to manipulate you, not at all, but to try to manage the expectations. It's very important that you understand that. Quickly then the chart. Here you see the federal fund, and you're seeing just spiking up. So the Fed is being quite aggressively, and I think they also know, like, oh, the genie's out of the bottle, we gotta step up, we gotta do what is necessary, and they're now just aggressively starting to raise the interest rates, and until we really hit the recession, and then they probably gonna say, well, we maybe overshot it a little bit, let's calm down, and then maybe they'll lower the interest rates again. That's at least 12 months out from now. So what I can understand from this story, and I said it also this morning, is that I do not, I at least expect that they will start rising the interest rates for the rest of the year, and then we'll see what they're going to do next year. But now already it looks like they're preparing the market for, we most likely will continue in 2023 to raise the interest rates over and over again, if that is necessary to control inflation. So far, the Fed story. Let's quickly head over to the charts, because that's actually what I want to show you. We're only going to do the smaller time frames here for BTC and a dollar index and gold, because that's where the action is. And you can see here this big hourly candle all the way up, all the way down. Now if I'm going to zoom in, let's do the 50, no, you know what, let's do the 5 minute. Then you can see that there was already a little bit more action. If you want to see for fun the 1 minute, this was absolutely crazy. So here the news came out about the interest rate hike. That was actually everything that everyone was expecting, and here kind of the meeting started, and then we just started to pump up all the way here, and that was a major move. If you caught it, that was 10%. All the way from here. I think I cannot remember that we ever had a Fed meeting where we pumped from top to bottom more than 10%. So congratulations if you took that move. I didn't take it because unfortunately I was not there, but so far it looks good. Quickly zoom back, because as you can see I have drawn two lines. It looks like we are kind of making a channel. This is going to be interesting to see. We went down today, dipped just approximately at that 20k, not really at that high of 2017, and then we pumped up. Then we made a higher low. This is interesting. Higher low, here and here high, and here high. So now the question is, what are we going to do? Are we going to break out of this channel, or are we going down from here? This is just, of course, very short term. This is just only the last few days, so kind of this trading week, because I said I want to wait before I see a trading setup. We can pull fibs here and there if you want to see if we hit a golden pocket somewhere. Yeah, a little bit. It's a little bit biased, of course. I think actually that I personally would take maybe this high right here. No, we have not really retrieved yet then to the golden pocket before we are going higher. Maybe then the other way around. Let's see if we have something from this big move up till down here. No, also not yet, so it's a little bit of a no trading zone. I think I do we have, yeah, this was a little bit maybe of a move. I didn't catch it, but this was actually a bearish divergence that I saw coming up, where you can see, let me zoom in a little bit, because if you're watching this on your phone it's hard to see. You're seeing the price is going high, the momentum waves here are going lower. That was actually a nice move up, and in this environment where it's so wicky, you can have 4 or 5% easily on a day, but it's also very very tricky, because you can see we can just shoot up. I mean, only in this 5-minute candle we went up and down 4.5%, so you gotta have nerves of steel or balls of steel to trade this kind of stuff. I know that some people had some very good trades, but protect your capital at all costs. We could even say that right now we may be making even a bit of a W and then breaking out. There is so much just coming in play. I actually also saw that we already made some bullish divergences here on the hourly, but as I said also this morning and yesterday, so far they have not really been playing out. Actually, there's one more other thing that I want to show you. You can see this is maybe, oh sorry, this is maybe a little bit of a busy chart, but you can see that we kind of played here with the daily open, where we just bounce off from, and then here once from that resistance there where we bounce off from. So that is interesting to see. If you're not in trade right now, I would say let it just play out until you really see a clear divergence, maybe on the bull side, on the bear side, where you can trade it to the upside, to the downside. For now, I would say this is kind of trading range, and let's just see how far it will take us, if this channel will be respected any longer. Of course, on the macro, then we still have many days in the red, but we are seeing that the VWAP here is coming up a little bit. Maybe the momentum wave wants to turn, and the RSIs are pointing a little bit to the upside. No guarantee from the management here, of course, but maybe a little bit of a relief rally would be nice. And then a midweek reversal, as it is called, where you see somewhere halfway the week a reversal in the price. That actually would be very nice, because now so far we already have seen quite the drop on the weekly base. That is 25% on the week. So a little bit of retracement actually would be nice and could make a very nice trade. Also on other indicators, we are just very much oversold. Let me see if I can add an extra indicator in here to see. I think no, I'm full for now. You know what? Let's take the SR out then. And then we take the RSI right away in there. And then you can see also on the 6 hour that this is so extremely oversold already for quite some time. So a bit of a bounce is to be expected. On the 4 hourly, we're getting more into a neutral territory a little bit. But a bit more of a bounce to the upside is also to be expected. And of course, higher time frames, they're still very much oversold. 12 hour, very much around the 20 level. Daily also around that 20 level, so still very much oversold. So a little bit of a relief rally of a bounce up would be nice. And on these levels, of course, as you just have seen on a daily base, that can be quite a lot. I mean, this was just a 10% move. You could say this from approximately 20,000 to 2,500 is already a 10% move. So if we would just go back, let me zoom out again, I'm sorry if I'm going too fast, but if we would just let's say we go here to the top again, to that 24-ish, and that is then this top right here, this candle, then we're talking about again about a 10 to 11% move. So these trades could be very interesting if you have the balls to ride them out, because they're just so volatile, as you have seen in this kind of environment. So definitely take your profits, right? Take your profits, pay yourself. Do not hold your position for the next week, 4 weeks or whatever. It's not that environment. It will not be that environment for the next weeks to come at least. Then I quickly want to go to the dollar index. This is zoomed in on the 15 minutes, and you see the absolute carnage that has been taking place here. Up and down, up and down, down, up again, and just wigs up and down. People got liquidated right here. Absolutely crazy how much price action we have seen. It is quote unquote only a percent, but this is the dollar index, and there's so much data going in here. So this wiki move that you see here is a lot for the dollar index, and it looks like now we might be rolling over a little bit, as you can see, where the money flow is just going down. If I zoom out even further a little bit on the 4 hourly, it looks like we have the same here. Money flow is just rolling down, but yes, we made a new high. So I am staying very cautious. Who knows, this just goes down a little bit, reset, and then go higher again. And I think we also talked about it earlier this week that we're looking at this approximately 120. So we're right now around 104, 105, and then here back in the days, actually let me zoom out to the weekly, that's a little bit easier to see. Yeah, now I have both on the screen, where you can see that right now 104, 105, that is the current level right here, and this is then approximately between the 112 and the 120 are those tops. So I think that in the next couple weeks I definitely see us going higher and reach those kind of levels. Then quickly head over to gold. Also gold had quite the party and quite the pain that it needed to take. Look at this, on the daily already 4 blood candles. I think I've never seen this before. Really, honestly, I think I've never seen 4 blood diamonds on the daily candles. But we have this very major important support that came in. And so far it looks like it's kind of holding. I really hope so. Full transparency, yes, I am holding gold. But so far I've been very disappointed by the price movement. But during the Fed meeting, and also let me zoom in here on the 5 minute, I don't have to point you out what the Fed meeting was exactly. That was here, and you can just see how the price just also went up and down depending on what they were saying. And then you see that it almost looks like they're using the price as a toy. But let's hope that we're now going a little bit higher, because the Fed is not raising the interest rates without a reason. They're doing that because they are seeing a lot of inflation, more inflation, take a longer period of time, and they want to take that under control. So if you have high inflation, then you want to go to safe havens with your money, with your currency, with your assets, and then you are choosing stuff like Bitcoin or like gold. And you see now here this major spike up here on the 4 hourly. So far this actually looks a little bit promising. Momentum wave is curving up. Then we have the RSIs going higher, VWAP going higher, money flow, yeah, still a little bit weak, but that could curve up. Here on the hourly actually looks a little bit better. If we zoom out, there we see the money flow really nicely curving up, so that so far looks good. RSIs, it looks like they're coming together, so that's good news. So let's see in the next couple of days if gold can go higher. But actually, to be honest, I'm really looking out for this macro kind of picture. I think it's going to be a little bit of a slow grind. Maybe something that we have seen here on the support line takes a while, and then we are taking off. I think we might see here the same, takes a while, and then we are taking off. So I will not be surprised if that happens. Who knows, it will take the entire summer, walk away in May and come back in September. Or how does that saying goes again? Sell in May. So that will totally make sense. Walk away, sell in May. That's it. So that will totally make sense. And then maybe after that gold picks up and has a rally in the last quarter of the year. Quickly then to the crypto bubbles. Believe it or not, we have green. We have green on the daily on the news, and BTC is pumping up a little bit. Some of the alts are taking the advantage to go higher just a little bit. Don't get fooled, people. The weekly blood red, monthly blood red, yearly also kind of red. So don't get fooled. At least it was fun to see that we have one day of a little bit of green. For the rest of the alts. So right now the major levels I'm looking at are these support and resistance lines. There's approximately 22,500 here at the bottom, of course, that important 20k level, and maybe here this level 20,200 ish. And let me pull out one more time the FIB retracement. I'm sorry that I took that out. This could be a possible nice trade if we would go yeah, actually no, it's actually not a nice trade. I want to say if we go lower, nah. Yeah, okay, maybe if we would make something like a double bottom here on this golden pocket that's hanging around 21,200, 21,300, maybe you could play it to the upside. It's not pretty. For now, I think I would just let it go and then just come back tomorrow. Then we have a little bit more data and then see what we can do. I promise that tomorrow we go a little bit deeper into the charts and the tag and the indicators, and then we'll have a little bit more clearer price levels. For now, I just want to bring you the news and the price reaction, as you can see, and tomorrow is another day, and let's see what it takes us then. Guys, thank you so much for watching, for bearing with me, for going from left to right, from top to bottom, zigzag. I would highly appreciate it if you like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends. I think as usual, very important announcement. I made a video yesterday about a possible bottom for BTC, when and where, and we're trying to use all kinds of calculation methods to come to a price that could be a bottom and a period of time that could signal the end of the bear market. Very interesting. It will be popping up somewhere right now. Definitely check that out, or you can also go to the channel where you see bottom for BTC bottom, when and where. Definitely check out that video. I think it will help you a lot to kind of clarify where we are right now, what we can expect for the next couple of weeks and months. Guys, thank you so much again. See you very soon again in the next one. Bye bye.